All right, we're live. I hope that you guys can hear me. Let's see. Let's see. I'm going to change my mic settings. Can you hear me? All right, let's see that. Turn it up a little bit. All right. So, real estate market update. It is the end of August, and that means there's a new month next month. So, we're going to have some fresh data and fresh statistics starting tomorrow, September 1st. We'll do another update at the end of next week to recount of what happened and what's going on um, today. So we're gonna go over the macroeconomy real quick, just some quick jobless claims, interest rates, what's going on there, and then we'll go hyper local to Palmdale to look at listings, look at what's going in escrow, and kind of what's gonna happen for the next couple months to see exactly what we can expect. So, first things first is are struggling right now. Um, we haven't seen a rebound in the bond market yet. Yet all the bad economic news out there, the jobs number was 138,000 new jobs. Now that actually doesn't keep up with the jobs lost due to the people exiting the workforce. So there's a massive shift, and there's been a massive shift in the labor markets. A lot of things are changing still. Um, but we'll see Friday where the job numbers lead us. It might have a positive or negative effect on the interest rates. Second, FHA. So with 1.25 point buy down, 4.875. Today at 1 point buy down, you're looking at 5% for an FHA. VA, 1.125 buy down, we're up 4.625. And conventional did uptick from the past month from 5.125. That's with the 1.25 point buy down, and 5.3 for almost 8 point buy down. So look, the rates are pretty volatile right now. They're going up, they're going down, but they're staying around the mid to high fours and low fives we've seen for the past week or so. Um, so let's take a look at Palmdale. What's going on with the market? Well, for one thing, we're still in a shift. The market's shifting, and that's nationwide. We're seeing price reductions, we're seeing more inventory. That's not new news. And it's not bad news. It's good for home buyers that have been sitting on the sidelines. On an average in the United States last year, there was 5.6 offers per house. Now, sharply declined. We're at 2.3 offers per home on average. So, buyers, less competition, get your offer accepted, and you can get some closing costs paid for. Secondly, let's look at the new listings. New listings for the past 7 days. This is the end of the month here in August. Been a crazy month, right in the last quarter of the year. So we'll see how we go. We've had 208 new listings come on the market, and 162 of those went into escrow. Now check this out. Out of all the listings on the market, there's been 200 price changes. Most of those are going to be price reductions. Pretty crazy. Let's look at expired. 63 expired listings with the past week, and 103 homes closed. So look, homes are closing every day. There's new homes coming on the market, but the market is the market. Make your decisions based off your family's needs and desires and wants, and make sure it's realistic. Um, let's look at the total market inventory. So total on the MLS in Antelope Valley, we have about 1,067 homes on the market active. Now, that's the total MLS. So let's narrow. A lot of people just look at the broad number. So let's look at the city. So let's narrow it down to Palmdale, Lancaster, Little Rock, and let's look at Cal City. Well, actually, that's not in the local AV, so we can put it to Lake LA. All right. And Quartz Hill. All right. Let's look at Quartz Hill. All right. So just the 5 cities of listings on the market in our total area. So we're still in a selling market, guys. We're not out of the red yet. A lot of home buyers may think, oh, the market's crashing. It's not, guys. The only thing is there's more inventory, more competition, and home buyers with the higher interest rates, your buying power from 6 months ago has reduced substantially. So keep in mind, for every 1% of an interest rate increase, you lose 10% on buying power. So a lot of buyers got knocked out of the game, are now coming back with price reductions in the market. So the market is adjusting. It's adjusting to the buyers in the market to see exactly where we're going to find the equilibrium point. Now, for the foreseeable future, we're not looking at a market crash. What we are looking at, however, is a market correction. And from that market correction, we're going to be headed towards a balanced market. What a balanced market is when a buyer and a seller are on the same playing field. Nobody has a one up on each other, which is a great market to be in. Now, when you're in a balanced market, you want to, if you're listing and selling your house, skills matter more than ever now. Marketing strategies. Of course, 6 months ago, a year ago, anybody could have put a sign in the yard and had it sell in 2 seconds because there was 10 buyers for every single house on the market. Now you're going to have one buyer, one house. In the next year or so, that's called market stabilization and equilibrium. We're going through a market cycle. It is what it is. It happens all the time. So if you're waiting to buy or you're scared that the market's going to crash, look, if you're in a payment that you can afford, stay in there. It's not going to change. If your job is secure, make sure you just make your payments. The market's going to do what the market does. But long term, we look at long term real estate, guys. So when the market goes down, no problem. Say you bought in at 500 on the 400 worst case scenario. Okay, wait some more time. The market will come back. What comes up goes down, and what comes down goes up. The market is not a straight line. It's cyclical, always. And look at the cost of your average car from 100 years, well, let's say 50 years ago. Was it $10,000? Was it $5,000? Now your average car today costs $45,000, $50,000. So everything goes up, and real estate. Real estate is a commodity. Believe in the asset you're buying. It's not going anywhere. It stays. Just get your home insurance. Buy in a good location. You get these things locked down, you're set. And you keep buying real estate. Ride the wave. Keep buying, rent it out, and keep buying. So hopefully this was some good information for you guys. And we'll see you in the next update.